want to welcome each and every one of you out to our long verticals and diagonals webcast today. I'm Connie Hill, and this is the time that we spend spending or analyzing stocks and using only these two strategies. Okay, they kind of fall a little bit into the intermediate to advanced types of trades. So if you're not all that comfortable with them, that's okay. We're going to hopefully raise that level today. Now, a couple weeks ago, we had a survey, and several of you made some comments and had questions that I want to answer today, mostly about the diagonal strategy. So we will delve into your questions. If you did that for me, I appreciate you filling out the survey, and we will take a look at those questions. Now, I hope you're following me on X. I'm Connie Hill, CS. We have the pleasure of having Barb Armstrong in the chat with us today. She's here to help me field some of the questions I can't quite get to. So Barb is on X as well. She does a lot of great posting. She is Barb Armstrong CS. So follow us. And as you have questions, type them in, because I'll keep my eye on the chat, and Barb will as well. Let's go through our disclosures and get down to business. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It's what you download to your computer. It's the most robust version of thinkorswim. We will not be mentioning commissions and transaction fees, but just know that's part of trading. You're going to have those fees there. When we talk about probabilities, such as the probability of an option expiring in the money or out of the money, remember they're theoretical in nature. They're not guaranteed. Past performance of any security or strategy does not guarantee future results or success. One thing that's a little bit different with your paper money than a live account is paper money does not simulate the assignment of short contracts early. A live market, yeah, that absolutely can happen. But in the paper money, it doesn't do that. So when we have some trades that maybe might have met that scenario, I'll try to point those out to you, letting you know. Well, we've got a good crew here with us today. Looking at so many familiar names and faces, we've got John, the Noble Savage and Texan, and there was somebody else chatting with him here earlier today. I think it was Greg, maybe. We've got Michael, Jack, Chris, Mighty Mouse, JTM or JM Tally, Chris, CB, several of you. Appreciate you being here today. What I'd like to do for our agenda is just review a little bit of concepts of diagonals and long verticals. We will be talking about both. I have several trades, example trades for us to take a look at today as we answer those questions that you had about diagonals. Now, as we look at just kind of what is a long vertical, what is a diagonal, they're kind of similar to each other in that we're buying a long option. And then with that long option, we're offsetting the cost by selling another option against the long option. They're different dates with a diagonal. They're just different strike prices with a vertical. On a diagonal, typically they are different strike prices there as well. But that element of it being in a different month really does make it a little bit more unique as far as, hey, how do we actually use this strategy when we've got another month in there? It's a little tricky. So we'll get into the details there. But typically you're going to have a bullish and bearish bias, or I should say bullish or bearish bias on these trades. Some of them are going to be a big bias and some of them are going to be a smaller bias. And I would say by and large, a stronger bias might be for the long vertical and maybe a less strong bias, maybe in a diagonal. We're in a diagonal, maybe we're not looking for a big move. In many times the way we structure long verticals, we are looking for a little bit bigger move. And sometimes you can use that as a way to distinguish which strategy are we going to take a look at? Which one do we want to use? Let's head over to my thinkorswim. And markets are down today, aren't they? Interesting. I lost my lines here for whatever reason, but looks like we had some decent support. Oops. Right around, let's try to get that again. Kind of some low points through here, and it kept kind of bouncing, went below it, went back up, went below it, and today it's like, say, what, 3 days in a row that at least it's below it. We don't have a close yet, but definitely looking a little bit more bearish. So my blue line is a 5-period moving average. My green line is a 20. So both of those are pretty short term, but you can see SPX now falling below those shorter term moving averages, where before it was kind of crisscrossing, and now looks like a little bit more of a downward bias here. If we see the SPX doing that, many times the NASDAQ follows. They kind of follow each other around a little bit, although the NASDAQ hasn't been as strong as the SPX, but it too down below both of those moving averages. We were looking to see if was it going to really breach this diagonal resistance? Had two days out here looking like maybe it was trying to, and then today gapping down. What happened to oil overnight? We don't really trade futures, but this is a futures ticker symbol. Most of you probably want to be familiar with. It's crude oil. And it's kind of been the news that has been pushing the markets around right now. So crude oil today, what is that, up like over 10%? I don't know about you, but I don't want a 10% increase when I go fill up my car with gas, right? But it's kind of what we're dealing with in hopefully short term. We don't know. The market will let it play out whether it's short term or not. The VIX. All right, we always want to keep an eye on the volatility index, and it's above, it's above 20, and right now it's at 26. Now that is, I'm going to say, relatively high. When it's down here around 14, 13, 12, it's pretty low volatility in the markets. But we've seen this steady climb as we've gone further into this calendar year, where the VIX has just been kind of creeping up. We had that huge spike that day when oil went to $20 a barrel overnight, right? But then it settled down and the VIX settled down. And so when we have volatile markets, there could be longer movements. Maybe the ATR, average true range of stocks, gets a little bit bigger because the volatility is there. Maybe we see wider spreads on things that maybe typically were narrower. And it's part of the environment that we're going to have to work with. Okay, so just be aware of that. All right. Yeah, let's see. What is your name here? Ocean J Trader. Maybe Ocean J Trader, I think might be the name. Can you please show us how to set up the closing of it also? Absolutely. Okay. Let's take a look at some trade examples first, and then we've got a few things to review in our example trades that we've been tracking and following, some of them for a little bit of a long time here. First example we're going to use here. Well, actually, let me show you some trends. I have some trades outlined for each of the stocks I'm going to pull up. I don't know that we'll get to every one of them, okay? And what I want you to look for here as I pull it up is, what is the recent trend? Okay, so first one, MCHP. Now, would you say the trend here is a little bit more sideways, or is it starting to accelerate? Okay, through this period of time, it was a little bit more sideways, and then as it dropped down below the 5 and the 20, then starting to have a little bit more of a bearish bias. But if it's really steep, man, staying below that 5-day moving average, for example, we get an idea that, oh, this one might be moving a little bit more. Okay, that one, surely you could do a diagonal with it, but the way we might approach it would be more with a long vertical, because we're looking for kind of a little bit bigger move. And we're also trying to correspond with the overall direction of the market, which right now seems to have a little bit more of a bearish tone than a bullish tone. Now let's take a look at another stock. Greg wants to know, maybe we could use the help of the RSI or the MACD. We could. I'll add those on. I wasn't planning on getting into major details about them, but sometimes they give us some good insight. We'll go with the MACD histogram here. And we'll go with the RSI here, Relative Strength Index. and bring it on over. We'll just use the default settings here, except that I'm going to make them so that we can see them a little bit better. Let's make that a 3. Let's make this a 3. Oh, this one's already 3. Good. All right. We are in good shape here. There we go. So yeah, we could see, what would that additional information give us, seeing the MACD and the RSI? Well, we could see the RSI is down in the oversold area. It's down below 30, which means sellers are in control. Same thing with the MACD, man, that momentum is pretty deep to the downside, deeper than it's been in the last 6 months, right? We can see maybe that was deep here back in November, but it's even down further. So definitely showing some weakness of the momentum. Well, I should say strength of momentum to the weak side of things, or the bear side of things, okay? Now we're going to contrast this with, actually, I'll pull up this other one and then we'll do a contrasting with. ARM Holdings. Hopefully we'll get a chance to come over here. I've been noticing about here on this one, when you think about it, is it trading more sideways or more vertical? Okay, what's the trend? It had been for a long period of time a little bit more sideways through here, right? Then it was starting to become a little bit more bearish. And then today I just drew on, this nice little channel, this diagonal down channel that it looks like it's moving into, okay? So this one actually could be on the border, maybe a slightly bearish, or to even be a little bit more bearish with it. Its RSI is down. What's that down to? It looks like 41. MACD is fairly low. It's not as low as it has been previously, okay, on that downside. But the with the MACD, okay, so the momentum is to the downside, not as strong as it was here in November, but that's okay. And then we're going to look at one other one here. Kelly wants to know, is the diagonal put Vega positive? It is because of the longer legged, the longest dated option typically is long on that. And so, yeah, when volatility increases, that will increase the price of that overall, that trade. Yeah. Oh, I'm just noticing there is a survey already out in the chat today. Now, those of you that have been with us for a while, we'll do some surveys from time to time, and we really appreciate your input and feedback on it. I'm going to encourage you to fill out that survey. Maybe just click on the link right now, let it sit in the background until class is over or it's time for you to leave. To fill that out, but we love your feedback. I read everything you send in to me. 2 radio buttons, plop, plop. You could be done with it right there in like 2 seconds. Or if you want, there's 2 questions you can answer. And I also encourage you to use that space to communicate something to me that you would like covered in our class, which is actually a couple questions that we're going to be answering here today from the previous survey about diagonals, okay? Now, one other stock here, AMD. Now, AMD, it's had some runs, right? It's had some bullish runs, kind of got in here a little bit more sideways recently, but it looks like right now it's below the 5-period moving average and kind of been using that a little bit. The 5 and the 20 are actually really close together, looking like maybe it's going to go a little bit more bearish. But does it look as steep of a downtrend as maybe what we saw on MCHP? MCHP, microchip technology. Notice how this was, it's really dropping pretty quickly here. On AMD, it's dropping, but maybe not quite as quickly. So the couple of questions we're going to answer here. Somebody said, review in terms of market conditions and technical setups. The diagonal, why might the diagonal be the right strategy to choose based on what's going on there in the market, as well as the technical setup? And then somebody asked the question, why are diagonals, and I'm going to maybe change that to when are diagonals maybe the better trade to go for? Now, I'm only going to be comparing the diagonals and the verticals to each other. But there is room to bring into the conversation other types of strategies, right? Even though we don't really trade them in this class. But if we're looking at something, we think, man, that thing is dropping. Sometimes, we might buy a long put on it. In our class, we'd make it into a long put vertical. A diagonal, I kind of mark it in the area of looking for a slight move, not a big move, okay, but more of a slight move. So say here on AMD where we're looking, yeah, it's looking a little bit more bearish right now, but the trend is kind of slight. It's not like a giant ski slope. It's more like the flat going down to the ski lift. Barb can understand this analogy because she went skiing the other day. All right. But so I allow, and you can too, allow kind of the steepness of the trend to maybe dictate how big of a move we might expect out of a stock. Okay. George says use diagonals when you expect a gradual move and want to benefit from time decay. That as well. Yeah. Time decay is one element of a diagonal that we use, that we count on as part of using that strategy. And we'll talk about that when we review a couple of traits. Now, AMD, let's see. Somebody said ARM, Chris said ARM and AMD look neutral to me at the moment. They very well could be, right? Your definition of mine might be a little bit different as far as what we might look for. What I'm looking for here is I'm noticing we've got a high. We've got a lower high. We had kind of a low here through this area, 193, but it did go a little bit lower. So I'd say there's a slightly lower low to go with these lower highs that we're seeing here, right? This one, maybe just a tiny bit higher, right? So a little bit lower and then significantly lower. So to me, that would be why they are a little bit more bearish. And the other thing with this is I like the idea that this is kind of the first, this would be the Kablod day, that if it were to close right where it is, which we're not near closing, but it would be a close below the low of the high day. So, you know, these little 4 or 5 days ramping up here, here's the high day, and the low is about right there, pretty close to maybe where the stock opened up today. And so if we were to close here, we'd get a close below the low of the high day, which we're looking for when we're looking to do something a little bit more bearish. Now, I would say on AMD, this one, we're going to do a diagonal on. We're going, because the move is not super steep. Yeah, we have volatility in the market. Yeah, there's a technical setup to go bearish on this. And so, you know, that factors in whether you might do it or not. Now, somebody might look at this and say, well, I would rather do a short call vertical on it. You might. That might be what you decide, that you're not really looking for any movement, just for it to stay below a certain point. And that certainly could be a valid approach with this particular stock. But it's not part of our class, so we're not going to go into it. Okay, I just do want to recognize that, though. So on Michael says, you know, where do we want volatility for diagonals? It's not even so much where we want the volatility to be, but we would like there to be the potential for the volatility to increase. And let's maybe put that on here, on the implied volatility. Where's my imp V? There we go. And I'm on this, I'm going to take off our RSI just because I don't want there to be too many studies on here. So sorry, whoever wanted RSI, just know most of these are in a weak area. Okay. So implied volatility, typically when stocks are dropping, implied volatility has a tendency to go up, right? There's bad news, there's fearfulness. Yeah, then the implied volatility has a tendency to rise up there. So when we have a longer dated option, which we would in a diagonal, that would be beneficial for that longer leg. And it technically is the bigger leg in the trade, kind of the bigger driver. We have the long leg and a short leg. The longer leg there is more of the driver. And I would also say here on this MACD, man, yeah, the momentum is up and over the zero line, but look how dinky that is. I think it's called out a molehill versus, say, maybe the mountain here. The momentum, man, it just didn't get very high before it started to roll over today. So hopefully that is helping. So what we're going to do here, Paul, we're going to set up this trade as a diagonal. And so we're going to sell something short in a shorter time period, and we're going to buy something longer dated out. Now, traditionally, and sometimes I do things non-traditionally, but traditionally, we might buy a longer option Typically I'll just say further dated out, and it kind of depends on how big of a move you might be looking for. Okay, so on this one, we're going to use the March contracts. But what I love about AMD for a diagonal is it has some weeklies here as well. So maybe we sell this March 20 expiration date first, and then come next Thursday, if we're still in it, then we would either roll it, which basically just means close it down and open a new one. And then we might come down here and say, okay, great. If we are going to be active with it, we'll sell the next week out. If we don't want to be that super active with it, maybe we spread it out by a couple of weeks, okay, and sell that particular contract, okay? But it gives us a lot of opportunities to sell, 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 sell. And the idea with selling is to try to lower our net debit, because the longer leg we're going to buy out here in May, it is going to be a little bit longer dated. It's going to be more expensive. And so selling against it allows us to basically try to lower that net debit. And we're also hoping the stock continues to decrease in value, because that will help that long leg. In this case, we're going to do May. So on this one, we're going to do, let's see if it still makes sense. I had written down maybe doing the 190 here. And quite honestly, we could do 200, 195, 190. It looks like, man, 197, it's just kind of between the two here, between the 195 and 200, where the price of the stock is right now. So many people might go kind of at the money. Some people might go slightly out of the money. I'm going to go with the 190 here. Earlier it was a little bit higher. Let's go now to 95. I'm looking for a 40-something delta, and this one now dropped too much. So it's not a 40-something delta anymore. So let's go 195 as our long leg. So I'll go kind of mark that over here so I remember. And then what about the short leg? Well, we could sell something that expires tomorrow, but there's probably not a lot of time left on that option. And so we're going to come over here to the March options. Lots of liquidity here, man. Thousands of contracts. We don't have to worry about that, which is one nice thing about AMD. I mean, the day is early. It's already sold or traded, I should say, over 11 million shares on the day, and the day is young. Okay. So yeah, look, so here on the one that I want to sell, let's see if this still makes sense. I was looking at selling the 197.50, which could be a little aggressive. We're going to be buying the 195. So let's do that. We could do 197.50, 195, but that would be a calendar, or maybe a little bit further out of the money, maybe a 30-something delta. So we might look here maybe at the 192.50 or the 190, because we're seeing a 30-something delta. So it's a little bit further out of the money. Okay. Let's go with the 192.50. Yeah, we'll go with that. It's a little bit off of what I was thinking. I was thinking maybe 190. Let's go 192.50. Now, it could be, if the stock continues to drop and we get an opportunity to roll, that we just continue to sell premium here. So notice in this one, if we do, I said 192.50, we're selling this, we're getting almost $5 of premium, and that's going to make that net debit of the long leg more feasible. Okay. So just on the site, I'm just going to do a right mouse click. And technically, this is a buying position. It's going to give us a net debit. So we're going to say buy diagonal. And so it queues it up. It knows which leg we wanted to sell because we started there. But it doesn't know, do we want to go out to the next weekly one for our long leg? And it doesn't know what strike we want to go out to. So then we fill this in. Okay, so we've already decided we're going to use the May 15s, which are the monthlies, for that longer leg. And we're going to go, instead of 190, you know what, I told you we're 95. That's the one we're going to go with, 95. 195, I should say. Okay, now that 195 was pretty expensive, and so if we're getting in the neighborhood of $5 for it, we can see, oh yeah, that's cut that price down fairly significantly. Okay, let me just check and see what questions we have about that we haven't kind of gone into. Yeah, so yeah, Barb's just given a little additional clarification here on the diagonal. So typically the one that we're going to sell short is a little bit further out of the money than the one that we're long. Okay, and so that's why I say this long leg is. We could have even done the 197.50 now that it's close to that. But I just want to go a little out of the money. I want a 40-something delta. All right, that's the one we're going to start out with. And we're not going to put a target on it. One of the questions came in here, well, then what do we do to manage it? When do we decide to get out? Really, our plan isn't to get out for quite a while, unless the trend really changes on us. If the trend really changes on us, then we need to shut the trade down. But if the trend continues to be a little bit bearish, we want to continue on with this trade. Okay, so we're not going to put an exit right here. What we're going to expect to do is after we get filled, we're going to expect to sell the next week, which is considered what a roll, which you basically would go and sell or buy back the leg that we're short and go and sell another one, a different strike price, a different week. And that's why it's called a diagonal, because we're using different dates on the calendar. Okay, so let's go ahead. Let's put this little guy in. I'm going to put him in our dynamic diagonals along vertical section. Marcus said, are we looking at the strike price or the price of the delta? Delta can be really helpful as a guide. However, knowing that something's out of the money or in the money is also helpful, right? So we're going to sell something out of the money. Well, how far out of the money do we want to go? Well, let's consult our delta. All right, so we wanted a 30-something delta. I mean, we could have selected the 190 because it's also a 30 delta. Could have selected actually even a 27 delta, a little bit further out of the money. I was looking to bring in some decent premium on this first move. Okay, but we'll see where things look like when we get to next week. I'm going to try not to close it out without you unless it's really stupid that I don't. Okay, then I'll do it. Well, my plan is to do it in class. Okay. Oh, when we roll question. So CB says, are we looking for a 40 delta when we roll? 40, 30, something in that range, depending on how aggressive you want to be. I know some people that will sell the at the money. And that's just kind of a twist on this strategy, where they're like being really aggressive with what they sell. And so they're selling at the money, at the money, at the money. We've done some trades like that. But typically, okay, we're talking typical diagonal, we want to sell a little bit further out of the money, and you get to decide how far that is. Or you want to be aggressive, you want it in the high 40s, maybe a 50. Do you want it the low 30s, right? Where the likelihood of it expiring out of the money has a little bit higher probability. Now this column, let me see here. This should be probability OTM. That's what this is set up to out of the money, the probability out of the money. All right, it looks like we got filled on that. Kelly says in the money even, there could be some people that might, if you're really, really aggressive, you could sell in the money. Okay, but so that's kind of how you gauge it. Do I want to be aggressive, more conservative, just kind of in the middle? Okay, today we're just doing kind of the basic, not being too aggressive. Okay, let's do this. Let's shift gears for a minute because I do want to review some positions, and two of them we're going to whip through, and the other ones are diagonals, and they take a little bit of discussion. Okay, and I think in this particular class, it's really important to have that discussion. So let's look. We did two couple of trades last week. First one we did was LYB. We were looking for maybe some opportunities in the market where maybe because the price of oil going up, maybe because of what's going on in the Middle East, that maybe some of these stocks might, start to have some love sent their way because they involve oil premium, premium not meaning money, but oil related, oil and energy related, heating oil could be as well, natural gas. So we got into this trade here. LYB, this was Thursday, we got in. It went up Friday. It gapped up a little bit here Monday, got us out of the trade pretty early because we said, if we can get a certain amount of our gain on it, let's get out. We said 70%. So sure enough, come Monday morning, it got us out of the trade pretty quickly. And I'll open this one as well. We said, if we can get 214, let's go buy it back. Let's be done with it. So it hit the 214. We actually got filled a little bit nicer than that. We got filled at 239. Okay. We had 15 contracts out there. And so what is that? That's about about $1.09 times 15 contracts. That was a nice little gain, a nice little quick gain for our account there on this one. Okay. The other one that was really EOG was the other one, and we need to look at this one. All right, EOG is more natural gas type play. Okay, and let's change this, say, to 3 months, so we're not looking so far out. So this was us last Thursday getting into the trade. Went up a little bit, pulled back, went up a little bit more. We've got the 135 as our short leg. So we've got 130, 135 long call vertical. And it's getting up into that territory where we like for it to be. So it's doing what we want it to. All right. I don't think it's near its point of hitting the gain that we're looking for, but we're up $200 on it. That's a good start. We're not there yet. Okay, so we're going to let it continue to work, and we have an order out there that says, hey, if we get a chunk of it, get us out of the trade. Okay, CB, you had LYB in a live account possibly, or whatever, and it hit your target today. Yeah, so very well could have. So yes, we are still in EOG here. We are going to look at Akamai. We're going to look at all these three. That's why I say we need a little bit of time for our discussion here. Akamai. Let's open up Akamai. It's up a little bit here today, and it's just kind of creeping along, doing good for us. This one we've been in for quite a while. We sold this as a May option, or bought it rather. It's our long leg in this diagonal back on January 22nd. Now, Akamai does not have weekly options, so it might not be preferred by some to be used for a diagonal type trade. Those that have weekly options and that liquidity sometimes are a little bit more enticing. But if you're just like, I don't need that fast pace of a trade, sometimes once in a while it's nice to have something that only has monthly options available to it. So Akamai is one of those. It's got 8 days left before it expires. Now, we brought in 105. And what's happening here with the price of the option? It's actually up to 110. So at some points it has been eroding when maybe the stock was down a little bit. But look at the gain in our long leg. This is really where the value of the trade is coming in here. Is this long leg has gone from 1060 to 1580. So that's up about what? I'm going to say ballpark 50%-ish, 49%. We can see there. Okay. We could roll it right now for an April option. Let's just come back here real quick. It's finally just, that's EOG. Akamai. I didn't show you the chart on Akamai. But it is running up here today. Pull back a little bit. I was going to say it was up a little bit higher as far as the overall trade value. But again, this one, we just have monthly options. Now on this, then, if we wanted to at this point, we could sell April. I would like to maybe see us get a little bit more out of the one that we're in right now, though. Let's see if this can dwindle a little bit more. Maybe roll it when it's positive instead of negative. Okay, so this one, either way, we're in the time frame when we know we need to exit out of the trade. I won't expect to be here next Thursday. I will have expected to have rolled it by next Thursday. So if you wanted to right now, you obviously could. I just want to milk a little bit more out of it. Okay. Kelly says, so the diagonal reduces cost. It's basically a long put vertical with a long and short strikes having different expirations. And that is theta positive. So yeah, it is similar to that in a traditional construction. There's ways you can do it untraditionally as well. Okay. Now let's take a look at, oh, and for those of you wondering on this one, I'm thinking to roll to the 115, the April 115 call. Where would April 115 be? It'll be, well, actually, maybe not. That's in the money now. It's moved a little bit. Would be selling something maybe a little out of the money. Okay, could turn into a calendar if we sell the same strike price that we're on. Okay, but we're not quite there. Tesla. Let's come over here to Tesla. Tesla needs to be rolled. NVIDIA needs to be rolled. On Tesla, let's just check him out here first. So we're long the April option here. We've got 36 days here. That price and that put has gone up a little bit. On our short leg here, we collected 935 and it decayed a little bit, but now it's up here today. So we're down on that side of the trade. And you can see here, we're pretty flat here, $15, $17, whatever, right? Pretty flat. But it is time to roll, and this has weeklies, so we're rolling it, okay? We do not want it to be in the money, and you can see my little ITM there letting me know, hey, this is in the money. You've only got one more day. We have to roll it, okay? Let's choose where we're going to roll to before we put in the rolling order. So we're going to go to, yeah, that little red block on there, so I can just hit a send to. Okay, so here it is. Tesla has what? Monday, Wednesday, Friday options. Monday, Wednesday, Friday. In our class, we've been choosing Friday so that we can look at it on Thursday, see where things are. That's the only reason that we're doing this. If somebody wanted to be really aggressive, super active, they could go this weekly, this weekly, this weekly. You could be like Oprah, a car for you, and it would be a week for you, a week for you, okay? We're just going to do the March option. We're going to do something a little bit out of the money. So let's, in this case, let's go 390. Okay, I'm just going to write that down on my border. 390 is about a 38 delta. If you wanted to be more conservative, you could go a little bit further out of the money. Now, you might want to look at the chart before deciding that, but it's kind of been just kind of a little bit sideways. Hasn't been a real big drop, just kind of been a gradual drop. Okay, all right, let's roll this. Right mouse click, create rolling order, and really rolling just means getting rid of one and selling the next one all together in one motion. There's nothing magical about that. You don't have to do it that way. It's just the way that we're going to. Okay, so this one here, did I pick the wrong leg? Let me go back here. I want to make sure it's the 405 put we're rolling. Create rolling order. Okay. 405 put. Okay. Here's our 405. It doesn't know what we want to go to, doesn't know what period we want to go to. We decided we wanted to do March 18, not March 16. So, oh no, we want to do March 20. March 20 is the 8 days out. All right, so now we've got the right date. We're going to change it to the right strike price, and we're going to go 390 on this one. So a little bit out of the money. We are a little bit underwater on it. So yeah, we probably are going to pay in that debit here. We're not going to worry about that too much. We just need to sell it. We just need to roll it and move on. Okay, you can't stay in the one we're in. And we'll just send it to that bucket. All right. If that doesn't fill while we're together, I'll let it fill later. Okay. NVIDIA, it needs to roll too. It also has a Monday, Wednesday, Friday expiration. So on this one, let's see what we're doing here. We've actually got an April long leg, and this is March 13th as well, so it expires. This one has performed nicely for us. We brought in 345. It's worth 58 cents now. So are we getting the biggest chunk of that? Yeah, we are. Now, the long put, we would like it to be higher. We do want that to increase. It really isn't right now. So most of the gain has come from that short leg. Okay, well, let's roll it. We're going to roll it out to the next week, March 13th. We're going a little further out of the money. Okay, so we're going to do create rolling order. It's got our March 180 put. And as we look up here, in terms of what's in the money, what's out of the money, let's maybe come out here to say an even 30 delta. You could go, again, however aggressive you want to be. We'll go with 30 delta. So we're going to go the 177.50. So we're going to go pick that. That'll adjust. Okay, good. We're going to get a little bit of a credit on that. We don't feel bad about that at all. Let's go ahead, and that's our new trade. Okay, so now we're short March 20. We've got 8 days. During the week, we just want to watch time decay. It should be fairly rapid because it's the last little bit of that option's life. And so that decay really hits pretty hard. Okay. Let me make sure I'm catching all the questions. Yeah, I said most of the focus would be today about answering those diagonal questions, but I also have, let's look at one other. We have time to do one quick trade, a quick other trade. This one's going to be a vertical. Okay. MCHP was the one we looked at here first. Okay. Again, a little bit under that 5-day moving average, a little bit steeper here. What's it doing right now? Man, today it's the close below the low of the high day. Love it. We like that as an entry. Okay. So what are we going to do? We're going to do a long vertical. We are going to use the April options here. We've got 36 days in it. And typically we like to maybe go out the money. Let's see if what I had chosen still makes sense. I had chosen 67.50, 65, but the stock's actually moved a little bit. We're just going to go 250 wide here. And we're going to say buy vertical. There's decent open interest. It's not like a monthly where there's tons, but there's decent open interest here, which is good. This is a $2.50 wide spread. We're going to sell it, or we're going to buy it for $1.25, now $1.30. And so what do we have to gain? Basically $1.25. And when it's at 125, let's lock it there right now. We can risk a little bit on this. We can risk up to $2,000 in this account. Let's just do 10 contracts here on our long vertical. What do we want it to do? We want it to drop below 62.50. Where is it right now? 63.50. So it needs to move $1, and then we would love for it to continue down, make a steep move, so hopefully it hits our exit. I'm going to do a first trigger sequential, create an opposite order, and then we want to get out of here when we have what? Maybe 60%, 70%, 50%, whatever it is, the magic number that you like. I'll go with 60%. Just know that's what I'm going to do, but I'm out of my time. That's what I'm going to put it back for. We're going to try to lock in 60%. See if we can't hit that pretty quickly because of the steep slope on this one. Okay, so hopefully our discussion going through, did I do the wrong one? CB thinks I rolled to March 16th, not the 20th. Okay, I better check that out then, CB. I'll go check that out, see if I clicked on the wrong one. In any case, we've talked about a little bit more answering your questions about diagonals. Why, it's kind of easier to see, I think, where long verticals fit. Kind of like, if you think there's a decent size move, but you don't quite feel comfortable going long the option, or it's an expensive option, yeah, that's where maybe that long vertical could fit. Diagonal, not as easy to peg, but we're looking for a little bit of movement, just slightly out of the money, typically is what we're looking for. And when we do, we can bring in some decent premium. All right, my time is up. That's what we have going on. Now, I hope you're a subscriber. If not, go ahead, click on that button down there that says subscribe so you can find our content. There's that survey out there today. We always appreciate it when you fill that survey out for us. Appreciate you doing so. Take a little bit of a break, and then coming up at the top of the hour, we'll have Cameron May with investing in dividend stocks. So a little bit slower pace, a little bit longer term emphasis than what we've been focusing on here in this class. Barb, thank you for your help. Thank you to every one of you for being here today. Appreciate your participation, your questions. It's awesome. All right, we'll check back on these trades next week. We'll see you there. Bye-bye.